Hi, all. This is Craig Cook with Acre Mortgage with the Brondt-Cook Group, excuse me. And I'm here to talk to you about some new changes on the horizon for FHA. On March 20th, 2023, FHA is going to be dropping their mortgage insurance annually, the annual MIP. So this chart shows you what the new mortgage insurance will be. So just some background on mortgage insurance. FHA requires that you pay 1.75% upfront, which can be financed of your loan amount as an insurance premium, but they also have a monthly insurance component. And how that's calculated is based on a percentage of your loan amount. So this column right here is the percentage. BIPS just means basis points. In other words, it's 0.50% of your loan amount annually if you put down 10% or more. And the duration just means how long the mortgage insurance will last for the life of the loan. In this case, it would be 11 years. Now, insurance is there to protect the bank in case of a default. Now, if you're talking about conventional loans also require insurance, but that's called private mortgage insurance. And there's a whole bunch of factors involved with calculating that insurance. As you can see here, this is one of the insurance companies that's available. And as a lender, we get to choose private mortgage insurance companies, and we try to choose the best one for you because most of the time we're able to do business with any private insurance company. But you can see there's a whole bunch of criteria that you have to enter, purchase price, loan to value, the term, the decision in the automated underwriting system, the property type, your credit score. If there's multiple borrowers, their credit scores. Are you a first-time home buyer, self-employed? What type of property you're buying? In this case, we're comparing apples to apples. FHA is only used for primary residence financing, but also debt-to-income ratio, which is super important in qualifying for any loan. With an FHA loan, it doesn't matter about that criteria. If you qualify for an FHA loan, you're going to get this insurance if based on the amount that you put down. So it doesn't matter about your debt to income ratio, the type of property you're buying. If you're getting an FHA loan, it's always going to be based on your loan to value or how much money you're putting down, not your credit score or other criteria. So getting back to this chart, FHA borrowers doing maximum financing are now paying 0.55% of their loan amount annually. So if you just take 0.55%, multiply it by the loan amount, and divide by 12, that's what your monthly mortgage insurance would be. Now, what it was previously, right, what it is now until March 20th of 2023 is maximum financing is at 0.85%. So that's a 0.3% discount in insurance levels. And then for 10% or more down, you're actually paying at the moment 0.80% for a 30-year mortgage. Now, I don't want to get into 15 years just because you can see that in the chart. And most people doing FHA financing, I don't get a lot of people looking for 15-year mortgages doing FHA. But this is a home run for people that are looking for FHA loans. And if you think about it in terms of how this affects your qualifications, just think of it as mortgage insurance is a cost, just like your interest rate is a cost, right? Interest is a cost. So in March, you're going to have a 0.3% discount to your total cost, right? So if your interest rate is 6%, right, and you're paying 0.85%, you have a total cost percentage, right, of 6.85% now, but now that's going to be reduced to 6.55%. So it might not be a lot overall in your monthly payment, but those dollars add up. And this is a big home run for HUD and buyers that qualify for FHA loans. So let's take it a little step further and kind of dig deep on conventional versus FHA, because now the competition for these, which loan is better for you, FHA or conventional, that window or that rope is tightening a little bit, where FHA might be a better situation for you if you have a 700 credit score, or it's not as different as you thought monthly payment wise. And that's what I want to kind of show you here to give you a breakdown. So in this scenario, I priced out mortgage insurance and an FHA loan for a conventional loan at maximum financing with a 780 credit score, and an FHA loan at maximum financing with a 780 credit score. If you can see here, the monthly payments aren't that different, right? So if we look at your payment, you're at $27.15 versus $27.52. So not a big difference at all. But your cash to close is a lot different, right? This is because you're putting down 3.5% versus maximum financing at 5% down. Now, there are programs out there conventionally, so I don't want you to get the wrong idea, that allow for 3% down. But I wanted to compare apples to apples in a sense of what's the most likely loans to compare, meaning maximum financing is most likely going to be 95%, and maximum financing with FHA is a 30-year fixed at 3.5% down. So plus those other loan products, you have to be a first-time home buyer at 3% down conventional, or meet median income restrictions for these community development products. However, typically the insurance at 97% financing for conventional, the mortgage insurance is a lot higher than 5% down. But you can see that there's a difference in your monthly, the amount of cash that you need to spend, and the monthly payment is not that different, right? And that's at a 780 credit score. That's the best possible credit score that you can have right now in the mortgage world. Anything above that, you don't have any more advantage. So now if you look at a 680 credit score with FHA, right, nothing changes. You're still offered the same interest rate. And in order to get the 7% interest rate, meaning the same interest rate that you would at a 780 credit score, you have to pay more in cost. They're called points. So at 1% of your loan amount, you got to pay more money to get that 7% interest rate at settlement. And now the cash to close is exactly the same for an FHA. So the gap is getting narrower in a sense because of this drop in mortgage insurance, that FHA might be more competitive for borrowers to use in lieu of doing a conventional loan, which up until now, a conventional loan was something that you'd rather look at if you have a 700 plus credit score in that situation for maximum financing. And let's dig deep on the payment info, right? If we break down the payment, right, you see the mortgage insurance here is $109.25. If we look here, it's $132, and a lot of that is due to the money that you're borrowing. You're borrowing a little bit more money, but it's still comparable, right? It's within $20 or so, or $25 or so of your mortgage insurance for a conventional loan, and you're borrowing more money for the FHA loan. Let's see here. If you have a 680 credit score, your insurance is a lot higher for a conventional loan at maximum financing. And here it stays the same. So, and your payment is lower, right? And I feel like this is a pretty big deal. And if you look at APR, because I feel like that's a good indicator too of cost over the life of your loan, right? What's involved with your APR? It's the percentage that you're paying in all the costs over the life of your loan. So your interest is a percentage of cost. The mortgage insurance is a percentage of cost. And there's certain financeable fees that you pay at settlement that are considered in that number, like points, right? So you can see here that an APR, even though your rate is comparable, right, at 7% with a 30-year fixed conventional versus FHA, 30-year fixed at 6.75, you can see that there's more cost involved, including mortgage insurance and settlement fees over the life of the loan versus an FHA loan at maximum financing. So I just wanted to kind of go over that new news with FHA, that this should help borrowers out a little bit who are looking at FHA financing, or maybe some conventional borrowers that were looking at conventional loans and maximum financing is something they wanted to do, but the rates and costs were a little bit higher. We were kind of lowering that gap now, or shortening that gap between what's a better loan for you to choose, even in the 700 credit score range. And we can always take a look at your scenario and compare these products so that you can see what loan is best for your situation. But now, with the lowering of that mortgage insurance, FHA becomes a more competitive product than it used to be. So I hope this video finds you well. You can reach me directly at 856-552-0715. You can shoot me an email at ccook@acremortgage.com, or you can visit our website at www.acreloans.com. Fill out a quick survey or a form that will allow you to set up a consultation immediately with us to go over what options best suit you.